In a few years, when we're talking about Bitcoin's price, we're going to see that $116,000 is a rounding error. And in this video, I want to explain to you why I think this is going to be the case. Let's get started. What you see on your screen here is a chart that shows you the price of gold. At the top here, you can see how much gold's price moved in a certain interval. So we have a 1 day chart. Each one of these bars represent a day in gold's price. This is called a candlestick chart. So you can see here, just today alone, gold is down $40.94, or about 1.03%. Today, the price of gold is about $4,000. But if we zoom out, we can see that at some point, you couldn't even imagine gold going to $4,000. So if we go a little further back compared to where we are today, so in 2006, the price of gold was about $600. In 2001, it was about $250. If we keep going back, we can see over time, the price of gold only goes up. And the upward movements seem like they're becoming more and more violent. They seem like they're going up a lot harder and they're going down a lot harder. If we zoom into the chart and we look at the price of gold before 1971, we can see here that it was about $35 per ounce. And keep in mind that I think that gold's price is probably being suppressed by the people who are running the current financial system. They don't want you to use gold, they want you to use US dollars. So they're trying to decrease the returns of gold so you don't look at it as an alternative to saving. You stick to the S&P 500, you stick to bonds, you stick to real estate. I'm not going to go into that though, but you can see here at one point the price of gold was $35 an ounce. And again, if we zoom out, you can see today it did move more than $35 per ounce. Today it moved $41.34 per ounce. And the reason why I'm showing you this is because I want to show you the effect of holding an asset over the long term. And of course, this doesn't just apply to gold. We can look at this trend with the S&P 500 as well. You can see here in 1 day, just today, the S&P 500 is up $5.68. On October 10th, 2025, it was down $182. On April 9th, 2025, it was up $474. What I think is that the daily price movements are like rounding errors. We don't really care about the daily price movements. What we should be focusing on more is the monthly, the annual, and the decade returns. So like I said, a few months ago, the S&P 500 moved, it grew by $474 in a day, when just a few years ago, one share of the S&P 500 was actually below that amount. You can see here in 2009, one share was $689. If we zoom out a little further, we can see in 1994, one share was $451. And if we just go to all, you can see here, exact same chart. And why is this? Why is this the case for every asset? We can see the same thing for the Dow Jones. If we zoom out, exactly the same pattern. You can also see the same thing for single family home prices. So this is the monthly chart. In 1968, a house cost about 20 grand. Today, the price of a house can drop by 20 grand in a period of a month or two. The point here is that the price of anything that's being used to save for the future will continue to go up because we only save in things that are finite. We don't save in things that can be created at will. So you're not going to save in salt today. In the past, it was much harder to produce salt, so you saved in salt. You're not going to save in something like shells or buttons today because we can mass produce them. And whatever you save will decrease in value over time. Today, the things that we save in are hard to create and usually they're very durable. This chart right here is a perfect illustration of why all those things go up in price. So why does Bitcoin go up in price? Why do houses go up in price? Why do stocks go up in price? Why does everything keep going up in price? It's because the US dollar is losing value over time. More and more US dollars can be created over time. The purchasing power of the US dollar has fallen because more and more US dollars are being added to the economy. As more dollars are added to the economy, they find their way into assets because the people who are producing the most value aren't using all of that value today to sustain their lifestyles. They need to find a way to save for the future. The poor, the people who don't quite understand how money works, are the ones who are saving in this form of money, this savings vehicle, and they're losing value over time. But the people who understand how money works don't save in dollars because they know that the dollar's purchasing power will continue to go down forever. So the price of everything that I mentioned, the scarce goods that we want to save in, like houses, gold, stocks, Bitcoin, the reason why all those prices go up is because the price is in terms of something that can be created out of nothing. There's no limit to how many dollars can exist, meaning the price of everything that we want to save in can go up literally forever. So now let's go back to Bitcoin. I mentioned that $116,000 will eventually be a rounding error. At some point, you're going to see daily moves of $116,000. Bitcoin's chart is very similar to every other asset, but Bitcoin is a way better asset than everything else. The reason for that is that it fulfills all of the characteristics of money while other assets don't. But we can see here in October of 2025, Bitcoin's price moved from a high of 126,000 to a low of $103,000. And that's a move of about $23,000. And we can also see here at the bottom when FTX collapsed, Bitcoin's price was at about $16,400. So at that point, Bitcoin was worth less as a whole than the moves that we see in a month in Bitcoin's price today. We can see something very similar in July. It moved from a high of 123,000 to a low of 105,000. That's a move of about $18,000. In May, we saw something very similar as well, a high of 112,000 to a low of 93,000. Over time, every price becomes a rounding error. If we go back to December of 2022, we can see the high was 18,000 and the low was 16,000. And we can see that this was one of the least volatile months at that time. But we can also see here in June of 2016, one Bitcoin cost under $500. Today, a move of $500 means absolutely nothing. So I really wouldn't be surprised if Bitcoin's price is moving $116,000 first in a year, then it moves that much in a month, then it moves that much in a week, then it moves that much in a day. But to have that volatility, Bitcoin's price has to be a lot higher than where it is today. So for $116,000 to be a rounding error, how much does Bitcoin's price have to be? I would assume that it only has to go up about 8 to 10 times from here for monthly moves to be $116,000. This may be a very unpopular opinion, but I think that Bitcoin's price is going to become more volatile over time. Most people don't think this. Most people think that Bitcoin is going to be a more controlled asset. It's going to be used for collateral. People aren't going to move it. But that's what's going to make it even more volatile. Bitcoin has an inelastic supply. In the past, you had to buy or sell maybe 100,000 Bitcoin to move the market. Today, you can sell 10,000 Bitcoin and move the market. At some point, it'll be 100 Bitcoin. At some point, it'll be one Bitcoin. So I think within the next few years, Bitcoin will be at $1 million or more. And at that point, I think we're going to see massive volatility where we see wide scale leveraged positions being sold off and Bitcoin's price crashes, but then it recovers and then it crashes again and then it recovers and then it goes up and then it never goes back down to the prices that we saw in the past. I don't think we're ever going to go back down to $16,000. I mean, anything can happen. I made a video about how if Satoshi were to sell all of their Bitcoin, then it would probably drop down to $1,000, but maybe that's not even going to happen. At some point, Bitcoin will never go back down to $100,000. Then it'll never go back down to $1 million. I don't know how long that'll take, but at some point that will be the case. So at some point, $116,000 will be a rounding error. When you're telling people that you bought Bitcoin for $16,000, they're going to be shocked that you were even around to see that number. If you want to watch that video that I mentioned before, you can watch it here. It goes through what would happen to Bitcoin if Satoshi Nakamoto were to sell all their coins.